changes or trends that you would see a year from now? At the end of 2025 or the beginning of 2026, when we would need a new building insurance policy and everybody in here would need a new HO6 policy. Okay, so Tony's gonna talk about those things. Please feel free to ask any kind of questions. There's no questions that are off base or anything like that. And so, Tony.
Thanks for having me. You're welcome. So what did I just learn? This is called the Live and Learn Seminar?
Yeah, live and learn.
All right, awesome. Well, I'll do my best to help you learn. How's that sound? So I'm Tony Ciro. I work for American Family Insurance. I've had an agency for a little over 18 years. We do insurance for, I don't know, we're probably 400 or 500 different townhomes, condos, cooperative buildings around the state. So big piece of what we do. I always enjoy, coming to do presentations because I think, how a cooperative building is insured compared to how you have to insure your own individual unit, your unit belongings, interior unit is very misunderstood. Certainly by residents, but also by agents that set up HO6s often don't fully understand the interplay between the two policies, right? So I think it's important as a homeowner that you understand that. And I would say that I'll give you a lot of information. You may understand some of it, you may not. The intention behind the sheet that just went out, the handout, is that if none of it makes sense or you forget it, you should be able to give that to your personal agent so that they can set it up appropriately, right? For some of you, it may not be the first time you've seen that sheet. It has gone out in the past, probably went out somewhere around last November, but that is what that is there for. So the first thing that I think is really important to understand is that, when you move into a cooperative, you're given a set of governing documents, right? That's the language that governs how the cooperative is run. Well, there's an insurance section in there that explains what the cooperative is responsible to insure versus what the individual, members are responsible to insure. And the way that it says the cooperative has to insure the building is on what we call an original specifications basis, meaning that if there was to be damage to the building, it's the building's insurance policy or our obligation to rebuild it back to the way it was originally constructed, okay? So that means the building's insurance is responsible for the siding, the roofing, the windows, the doors, all the common areas, right? The room that we're in now, the hallways. It's also responsible for a lot of the structural elements inside of your unit, right? So your flooring, your counters, your cabinets, your trim work. The one thing it is not responsible to insure, which means it's your responsibility to insure, is if you make any updates or improvements after the initial construction, right? So the building's policy owes to put it back to the way it was originally constructed. If you're gonna make any upgrades or improvements, you need to be insuring those costs in your personal policy, right? The other thing that the building's policy has no obligation to insure is all of your personal belongings, right? Your furniture, your clothes, your dishes, your food, your televisions. That needs to be insured on your own policy. Again, your own policy is often referred to as an HO6, a homeowner's Form 6. It's for units within condominiums or cooperatives, okay? The next thing that's important to understand is while the cooperative has a policy insuring the whole building, that policy does have a deductible, right? Currently that deductible is set at $25,000, which means that the building's policy is not going to pay until damage would exceed $25,000, right? also means that if you had damage in your unit, right, and it's, you know, $1 up to 25,000, that's a claim that's gonna go onto your own HO6. So it's really important on your policy that you have at least $25,000 of what we call building or structure coverage, right? And again, that's in that letter you have in front of you, so.
Hey, Tony?
Yeah.
Pardon me, I have a question.
Sure.
About the damage to the building.
Mm-hmm.
Is that replacement cost?
It is.
Okay.
Yep, so Mark's question is if damage was to happen, is a claim paid for replacement cost? And the answer is yes, but what that means is that we would pay the sum of money needed to replace with new items or new materials, right? We're not gonna depreciate a settlement because your roof is, whatever it is, 2 years old.
I apologize, I have another question.
Sure.
Is that $25,000, is that per occurrence or per year?
Yeah, good question. So the deductible is per occurrence, right? So think of health insurance, a lot of times that's like a calendar or an annual deductible. On the buildings policy, it's per occurrence or per claim event, right? So if we had a fire, it would be charged a $25,000 deductible, and if a month later we had an ice dam, it's a new $25,000 deductible. Yeah, so.
Excuse me,
Yes,
doesn't it say 10,000 for ice dams?
you're correct. That was a bad example. Thank you. Thank you. I said I'd do my best on the learning part, okay? No, you're correct. So, again, going back to your own HO6, the first thing you need to make sure you have is $25,000, what we call building or structure coverage, okay? You're gonna want that on your HO6. That would cover that $25,000 deductible that was for a fire. It's also gonna be more than enough to cover the $10,000 that was for an ice dam, right? The next important thing is if the claim is due to wind or hailstorm, okay, then the deductible works differently. The building has a deductible of 5%, so that 5% is calculated based on the total insurance limit we have on the building, which is just over 21 million. So that deductible would be charged to the cooperative and then likely divided out amongst all of the units. So your share, if there was to be a major wind or hailstorm, is right around just shy of $19,000, right?
Per unit.
Per unit. So, the way in which you protect yourself against that is on your HO6, you need a coverage called loss assessment, okay? It's different than that building or structure coverage. You need to ask for it. It's called loss assessment, and we put in our letter to make sure you ask for at least $25,000. It's $25,000 for building or structure, $25,000 for loss assessment, okay? If you don't have loss assessment, or if you don't have enough, and the building was to be damaged by a storm, and you get an assessment from the cooperative for close to $19,000, if your policy doesn't have enough coverage to pay it, you're still responsible for it, right? So make sure you're having enough coverage there. I will say this, there have been a number of companies over the last few years that have changed the amount of loss assessment they will provide. If anybody has an HO6 that's running through Progressive, the max that it will pay is $1,000, right? So you want to make sure you understand how much loss assessment you have and make sure that it fits within what we recommend in this letter. So,
Tony?
yeah.
I know that when you and I were talking a bit, you had said that your agency also covers a few other Zvago developments,
Yep.
buildings.
Yep.
In your experience, like let's say in the last 5 years,
Yep.
have there been any of those major claims, like hail, wind, that you've paid out? Not you, that the agency
Yeah.
that has paid out?
Absolutely. I mean, we not just the Zvago buildings, but just condos in general. I mean, we've had 5 to 6 major hail events come through Minnesota for probably the last 5 or 6 years running, right? And so I would say on an HO6, the #1 claim we've begun to see is a loss assessment claim, and that's coming from the hailstorms that are hitting the condos and the townhomes. So super important to have that.
Before you go on, can you back up just a second? And
Sure.
explain where the $19,000 number that you're working with, where that comes from?
Yeah, so buildings insured for 21.5 million. When you take 5% of that, right, it's just, it's right around $1 million or so. I don't have my calculator out, but then you divide that amongst 57 units.
So that would, you're saying that a $21 million hail or wind claim, each individual unit would be responsible for $19,000.
That's not a $21 million.
It doesn't matter the amount of the claim, it's just, if there was to be a wind or hail claim, that's how the deductible gets calculated, is 5% times 21 million. Because 21 million is what the building's insured for. And so it generates a number, I don't have my calculator, but it's right around $1 million. And when you divide that by 57, each unit owner, homeowner becomes responsible for like $18,907.
But that would be a $21 million.
No, that could be a $1 million claim or a $2 million claim.
5% is what we're working with there?
Correct.
Divided by 57.
Yeah, so the deductible is fixed, and so are the number of units, so that's how we can figure out you need at least like 18,907.
Thank you.
Yeah, no, you're welcome. So, the couple other things that tend to come up, you know, as people say, well, what if we have damage in our unit, or what if we think we may have a claim? What do we do? We would ask that your first step would be to contact either management or somebody on the board. They'll be able, then we have one point of contact instead of 57, and we can then advise them, should that claim start on your own personal HO6, or do we need to start the claim, you know, with the building policy? You know, right now in the, you know, insurance market for cooperatives, condos, right, it's getting more and more difficult to find coverage for buildings at the pricing that you guys have right now, right? So certainly, if we can avoid putting a claim onto the buildings policy that doesn't need to be there because it should have went to the HO6 first, that's what we're trying to accomplish, right? So I would say if you think you have damage or you're unsure, you know, reach out to management first, or find somebody on the board.
Hey, Tony,
Yeah,
are any co-ops or condo developments self-insured?
no. So you're, the state statute does not allow it. Right? So there's a state statute that governs common interest communities in Minnesota, so it does not allow to be self-insured. Yep. Yes?
So just quick, because we have a community manager on site, personally, I would suggest that any claims go through that person, not the board.
Yeah, agreed.
Okay, thanks.
No, agreed. Agreed. So. And then just the last thing I have is, you know, these are your homes, right? You're proud of them. I'd be proud of it. It's a beautiful building. You know, if you see something that doesn't look right, try to take care of it before it becomes a bigger problem, right? You can prevent a lot of claims by just, you know, dealing with something when it's a small issue instead of letting it turn into a big issue. Can't tell you how many claims we end up with every year because, you know, the dishwasher hadn't looked right for a while, and then all of a sudden one day you come home and, you know, it's leaking all over the place, right? So I'm just kind of as a public service announcement, right? Try to deal with it before it becomes a problem. Since I'm on the water topic, I'll also cover that really quick because I generally get the questions when you're in a multi-floor building, If there is to be a water claim, you know, it starts on a higher level and oftentimes ends up in the unit below as well. So the question becomes, well, who's responsible, right? Who turns in the claim? And we've always said the unit with damage is where they need to turn in the claim on their policy. So, and you always get the feedback, well, that's not fair. If they overflowed their bathtub and now it's in my, you know, living room, why am I turning the claim? And the answer is, each policy is gonna turn in the claim under their own HO6. And if the lower level thinks there was some negligence, they have a means called subrogation to go after the other person's insurance company, right? It shouldn't have to be a battle between you and your neighbor as to who's responsible and who's gonna pay. The insurance companies will deal with that. So if you have damage, you start the claim on your policy, so. Yes?
If you turn in a claim, my experience as a homeowner was that I was told if I turned in a claim and then another claim, they would drop me.
Yeah.
So, here, are we at risk of having the insurance dropped when we turn in a claim?
Possibly, okay? I'll tell you a few things, right? So, in my 18 years of doing this and all the townhomes and condos and co-ops that we insure, I have never seen an insurance market as volatile as what we have right now, right? You know, you guys were offered renewal last year by American Family, the pricing was good, but there are, you know, numbers of condos, co-ops, townhomes that are not being offered renewal for one reason or the other. We've seen many companies just get out of the business completely, right? We've seen others that are non-renewing because of claims. We've seen some that are non-renewing because your coverage limit is higher than they wanna take on. You know, one of the major challenges in the industry right now, and this is kind of branching away from your question for a second, but we'll get back to it. One of the major challenges in the industry right now is that insurance companies are heavily regulated. And one of those regulations says that for every dollar of coverage they have out there, like in your case, 21 million, they have to have a certain amount of money in their reserve or surplus funds, right? And so as inflation has taken hold and the coverage limits keep going up because it costs more to rebuild, by regulation, their reserve funds have to keep going up. Well, you can't just create reserve funds, right? So a lot of companies have said, we're in this challenging time where we don't have the reserve capacity to support more and more big buildings, and so they've started to cut away some of the bigger buildings. You know, some of them it's been 50 million in coverage and above, some it's been 20, some it's been 10, it depends on the company. And so we're seeing buildings like this get non-renewed for a variety of reasons, right? Sometimes it's claims. What I would say is it's becoming equally as difficult to go out to market and find new coverage if you get non-renewed somewhere, because just like I just explained, at time of new business, companies have certain guidelines, and it might be, how's your claims been, right? Or how much coverage do we need on your building, right? Is it within our threshold? A couple of things you guys have going for you is your brand new construction. You have full fire sprinklers throughout the building. I mean, those are like two of the major things that companies look for right now. So we don't know what November brings, but your claims are clean. You've got new construction, you've got full fire sprinklers, you're under 25 million in coverage, so there's a lot going for you if we did have to go out to market, but so hopefully that gives you a little bit of perspective.
Thank you.
Yeah.
Do the catastrophic events that are happening in other parts of the country have any influence on the insurance rates here?
You know, I had a feeling I would get that question.
I have a feeling you know the answer.
So, and the answer is yes and no, right? So, not all companies operate in California, right? Not all companies operate in Florida where they've had the hurricanes. American Family actually is not in either of those two states. So,
They're not in those two states offering insurance?
correct. So, the claims being paid in those states really has no impact on the rates that American Family charges in Minnesota. However, every insurance company, American Family included, buys what's called reinsurance, right? So it's basically insurance on your insurance, right? So if our claims reach a certain, payout level in a year, we can recollect back some of those dollars through a reinsurance company. Well, reinsurance will get very expensive next year because of a lot of these national and global events going on, right? Depending on the publication you read, they're predicting the wildfires in California are, $100 billion event, right? A huge number. A lot of that's gonna hit reinsurance. Reinsurance will pay out a lot. And so that will ultimately filter down to everybody. So, American Family, is our rate gonna be, determined based on what's going on in California? No, but the reinsurance we buy and ultimately charge through the policy to you guys will. So,
But if you do offer coverage in places that have also had issues, like Oregon or
Yep.
the Jersey Shore or something, Louisiana,
Yep.
those type of places.
Yep.
So tell us a little bit about impact in the areas where you do have coverage and how it impacts us here.
yeah, so Minnesota bases rates based on what the portfolio of business has done in Minnesota,
Okay.
right? And so the only time that things happening in other states is gonna impact here is via the reinsurance. Yep. Yes,
Can I just throw a couple of scenarios?
as long as it's not another math question. No, I'm just kidding. Yeah, go ahead.
There is math in this one.
All right, let's do it.
Say we have a $25,000 deductible on our bill.
Yep.
And we have an incident that is $25,000.
Yep.
How does that affect each individual unit in that scenario?
Yep.
And then could you do it again at 100,000?
Yeah, so let's just use your unit and you have a, small kitchen fire and it's 25,000, right? $1 through 25,000 will be paid by your HO6, right? That building or structure limit we talked about. So in that case, it has no impact to the buildings policy, right? And it's contained in your unit, it'll have no impact to anybody else's HO6 policy.
What if it's a common area?
Yep, so if it's common area, so the governing documents give the board basically 3 options to handle that. One is to pay that 25,000 as a common expense, right? Pay it out of the operating account. 2 is to assess it out to all unit owners equally, right? Or 3 is to, assess it out to in any reasonable fashion. So if they thought somebody was responsible for it or something of that nature. So realistically, it's either gonna be paid out of operating or it's gonna be assessed to everybody equally.
And then at 100,000, same scenario?
Same exact thing, you're just dividing the math different.
And the board has authority to do those assessments?
Correct. Yes?
Could you talk a little about the sewer backup endorsement for the HO6 units?
Yeah, so the buildings policy has coverage for what's called backup of sewer or overflow of a sump pump. That would be if the city sewer backed up, comes up the main drain. In your building, if that was to happen, it's gonna be in the parking area, right? There's no units on the lowest level, am I correct?
Yes.
Are there some down on the lowest?
Yeah, and that end.
Okay, so, if it was to happen, it's gonna happen on the lowest level, right? The buildings policy has $300,000 of coverage for backup of sewer or overflow of a sump pump. That is subject to the $25,000 deductible, that's in the policy. So, you know, if somebody has a concern, so if you are on a lowest level unit and you're worried about that damaging in your unit, right, you would wanna add sewer backup to your HO6 for $25,000, right? So then your policy would cover $1 through $25,000, and then the building's coverage would pick up after that, so. A standard HO6 does not come with sewer backup or sump pump overflow, you have to add it on, and that's why you would add it on for $25,000 to meet the deductible. So, yeah.
And does that need to be added on only that bottom floor, that for the other floors?
That would be my recommendation, yes. Yeah, it'd be unlikely that it would back up onto a second floor unit.
And Tony, what would you say are the, if you're aware of this, what the trends would be for next year as far as a percentage, a dollar amount increase, or is that,
Yeah.
is that too easy or too hard to figure out at this point?
No, I mean, we won't be spot on, but I can
No.
give you kind of directionally where it'll be at. So, you know, this past year, I am gonna do a calculation here so I can't do this one in my head either. Yeah, so this past year, in terms of the pricing for the building, we're charging 23 cents for every $100 of coverage that's being provided, right? So 23 cents for every $100 of coverage. I would say on average right now, we are seeing condominium buildings or cooperative buildings that are anywhere from 30 to 40 cents per $100 of coverage, right? So if you're at 23 cents now and you're gonna go to 30 or 35, right, it's what, 50% rate increase, right? It may not be that bad, but it would, I would predict it's probably somewhere in the, you know, 30 to 50% range that things may jump next year, so, if I had to guess.
And those condo or developments that get not renewed, do they go into some kind of a higher risk category?
So it depends, right? So we've got what we call our, you know, your standard market insurers. So those are companies you've probably heard of: American Family, Farmers, Travelers, Hartford, so on, right? And then you've got what's called secondary market carriers. So those are companies you likely haven't heard of. It doesn't mean they're bad, they're just not advertised on TV in front of you all the time, right? The standard market carriers are the ones that are heavily regulated by the Commerce Department, right? So a lot of those carriers have put some pretty tight guidelines in place for what they will and won't accept as a new building. Where the secondary market carriers have a lot more flexibility in their pricing, in their eligibility, what they will take, what they won't. You know, they can kind of customize terms to a building. So what we're seeing right now is a lot of communities are not fitting within the guidelines of the standard market. Either they're too old, they're too large, their coverage limit is too big, there are too many units, you know, they're not sprinklered. So what I think is good for your building is your newer construction, you're under 25 million, you're fully fire sprinklered, and you have no claims, right? Those are things that start to fit pretty well in the standard market. So if you were to be non-renewed, there's certainly gonna be standard market options that are interested. But for those that don't have standard market options, we're going to the secondary market. And again, it's not bad, it's just different. So we're always finding coverage for them, but a lot of it's in the secondary market right now. So.
What's the outlook for buildings that have grills, both in the common space as well as in individual units?
We have seen a huge trend of companies saying, we do not want grills, certainly on individual balconies or decks.
Regardless of the siding?
Regardless of the siding, there's a number of companies that are no grills, period. We've got a lot of communities have to put rules in to like fully get rid of grills. If they're, you know, permanent, like in a community patio where they're, you know, more than 10 feet from the structure, those are generally fine. But it's the ones that are, you know, stored up against the building when they're not in use, and those have become very hard to find insurance for.
And what's American Family stance towards that?
They've never had one, so
Okay.
they have no issue with grills at this point.
Okay.
Well, hold on.
Yeah.
I was on the board for a co-op in Chaska.
Yeah.
An American Family had told them that we had to get the grills off the decks
Oh,
completely.
interesting.
And then they dropped, the association because they didn't do it.
So,
I think
okay,
the
so,
insurance rep-
no, I follow you. So the policy language actually says nothing about grills.
Right.
Right? So if a grill was in use too close to the building and caused a fire, there's nothing that would exclude coverage in the policy language from American Family. There are companies that have now put language in that say, you know, if you choose to have them, fine, but we're gonna put language in that says we can exclude it if it was used with closer than 10 feet, right? So American Family does not have any language there. Now, most every company now is doing on-site inspections, and the reason behind it is they're trying to find, are there areas that have potential for a claim that we can correct ahead of time, right? And so what likely happened there was an inspection done, a list of recommendations came out, right? Grills may have been one of them, and when those recommendations weren't complied with, that's when they said, we're gonna move on, so, yeah.
Thank you.
And that's become common with every company, right? They're all fighting the same battle of profitability and so trying to find ways to prevent things from happening before they do. No different than my example of if, you know, you got a small leak, take care of it before it becomes a big one, so.
So in that case, continuing down the grill path,
Yeah.
so if the grills were, there was not gonna be any coverage if there were individual grills, and there was a fire in an individual grill, the master policy would not cover that, but whose policy would cover that? The
Yeah.
homeowner's policy, the HO6?
Yeah, but see, the HO6 generally only is gonna have
Right,
25,000,
right.
so, yeah.
So what happens then?
That's a tough situation.
Okay,
Yeah.
not good news.
No.
Okay, so when you say get rid of the grills, we'll get rid of the grills.
Well, I mean, it depends what you have and don't have, right? And it depends on the insurance carrier, but I think that is definitely something that needs to, you know, be looked at,
Okay,
you know.
thank
Are you talking gas grills only, or does it include electric grills?
Yeah, so like I said, right now, American Families had no recommendations or no, hasn't said anything around grilling for this building. You know, if we were to have to go find coverage elsewhere, some have rules that say no grilling, period. We don't care if it's gas, electric, charcoal, pellet, no grilling, right? Some will say, we'll accept a gas grill as long as it's a certain amount of feet from the structure. It's all dependent on the carrier, but as of today, there's nothing, you know, restricting what you can have, but that day could come, so.
I think our member guide restricts. I just don't want you to lead these guys down the path.
Right.
Yeah, and that's,
You can do whatever you want to right now.
right,
Because the member guide, and I don't know if it's the bylaws, but you could either have gas grills that were built in, and then I think you can have electric. You cannot have a Weber grill with briquettes and
Yeah.
fire
Yeah.
and that.
no, fair point, so, yeah.
Can you address the pending issues with electric bikes and their batteries? Any insurance-related issues to where they might exist, et cetera?
I haven't seen any regulations anywhere around electric bikes and batteries, but we are starting to have more and more insurance companies ask, if there's electric charging stations, in the garage areas. They have been a source of fires. So there are companies that are starting to ask it as for some it's an eligibility variable, for some it's just a rating variable, right? But
Does that extend to full EVs and hybrids also, just the cars themselves?
no, there's been no, I haven't seen any questions or underwriting questions around what kind of cars are in a garage, but it's just, do they have charging stations or not? Yes,
I switched mine, so I have the same American Family HO6 as the master policy. Thinking that would be more seamless if there ever was a claim. Is that true or not true?
yeah, I mean, I think as long as somebody follows the guidance in that letter, right, you're gonna create a scenario where your HO6 is, you know, covering the gaps that would be there with the master policy, right? Now, you know, a couple of things, having American Family and American Family is theoretically it's the same company covering everything, so there shouldn't be any back and forth as to who's covering what, right? And then there's a feature where your deductible gets waived if both policies had to be used, but I think you can create a seamless environment as long as you're following the guidance in that letter, no matter what company you have. So. Yep.
And then I had heard that American Family was getting out of the multi-dwelling coverage for next year. Is that true, not true, unknown?
Yeah, there's been some truth to that. There's certain segments that they have chosen to not renew. That's been going on for about a year and a half. So.
What segments are those?
So it's been over 25 million. So there's a unit count and yes.
So when we were about ready to renew the insurance policy for the building, we were offered two different quotes, one for the $25,000 deductible, one for $50,000 deductible. In the case of the 25, then the HO6 for the individuals would have had to make sure they covered 25. And I assume for the policy, if we'd chosen the 50,000 deductible, the HO6 by the individual homeowners would have had to cover 50,000, correct?
Correct.
Price-wise for the homeowner. So our policy is divided by 57 units,
Yep.
and then each person has to go out and get their own.
Right.
Do you think it, for the homeowners, not the co-op itself, it would have been more advantageous for us to get the $50,000 deductible and let the homeowners try to negotiate a good 50,000 HO6? Or does it really matter? Does it really work out the same cost-wise to the homeowners themselves?
Generally, when you do the full analysis, and it's hard to do it precisely because everybody has a different HO6 carrier, right?
Okay.
But there's not a lot of net savings, right? So where you're saving on the building, you're picking up on the 57 unit order policies. There's not a lot of net savings.
Okay.
So,
All right, thank you.
Good question.
Yep.
I'm curious, like, say the building had $30,000 of damage.
Yeah.
Would it be more advantageous for us generally to cover that ourselves rather than submit a small claim and potentially have our rates go off or get dropped?
Yeah, I mean, that's certainly something that boards talk about, right? And I can't tell you what to do on that, but you do have that option. So.
This may not be a question for you, but maybe for the board people that are here. If that situation were to occur and we were given that option, do we have any idea on how that would, how that could be decided here? Is there a majority? Is there a quorum? Do we know anything about that? Janet?
Well,
Deanne?
the board would vote on it, I
The board
guess,
has
and
a
see.
fiduciary
Yeah.
responsibility to vote on it.
Okay, so the board can make that decision.
Correct.
Okay.
We'd look at what was in the operating costs, and we'd look at how much of an increase people might want in the next year. Or not, or a special assessment, as some people have been questioning, during
Lots of
the
options,
year.
yeah.
So, I guess I would just say, be careful. Treat things lightly.
All right, well, thank you for having me and the time and the, what is it called, live and learn hour? Appreciate it.
Thanks.